Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The recent April to June based head and shoulders pattern was not so clear here as it was in Kansas City or even Minneapolis, but it was still there. The break below the neckline, currently at 384.5, included a gapping move lower. The rising medium moving average, currently 364.25, did not stop the fall, but it did erode the bearish incentive enough that the task of stopping it was made easier by the 50% Fibonacci line for 2022 at 348 even. This hesitation carried on for just over a week, but then the market finally broke down through the 50% Fibonacci line. Now, please remember this hesitation as it will become part of a bear flag later on. Anyway, prices carried on lower, reaching target X in the 336 area. This was the primary target for the head and shoulders top. The market continued lower, reaching target X2 in the 330 area. This was the target for the mid-May to date bear flag pattern. This left two targets below. In the 299 even area is the secondary harder to get target X1 with the original head and shoulders top pattern. Then there is target X3 in the 308 and 3/4 area. This is the potential target below for the mid-June to date action being also a bear flag pattern. I told you this would come up soon. So what stands in the way? Well, in this case I will refer to my commentary made 2 weeks ago at the start of July, and I quote, "I would say there is one possibly combined area to look for, and that is the combination, or individually, as one is moving higher, of the rising long moving average," and that's currently at 321 and 3/4, and the 50% Fibonacci line of the March 2021 to May 22 move at 314 and 3/4. I'd also throw in the mid-March low at 311 and 3/4, but I'm not sure on this last one. That's the end of the quote. Well, prices did try down there last week, but turned back upwards for bullish harami disguised as an indecisive spinning top. This gapping move higher peaked this past Monday as the market ran into the declining short moving average, currently at 338 and 3/4, combined with the 50% Fibonacci line for 2022 at 348 even, causing a fall all the way back down to under the long moving average today, and once again approaching target X3 in the 308 and 3/4 area. Now we have two possibilities here. Firstly, a continuation lower with the mid-June today action being seen as a possible bear flag type move. Secondly, stabilization over the March low at 377 and 3/4 and the formation of a possible double bottom type action. Of these two right now, the large bearish halfway hesitation pattern seems to be in front right now. London UK feed wheat. The March to June head and shoulders top is still visible here, if a little disjointed as it has been in all the other grains. Now, this was by no means a good head and shoulders pattern. For starters, the left shoulder is small, and the right shoulder, well, it could have used some bulking up, but it will do. Yet the pattern is still there, and I pointed out 4 weeks ago prospective targets below, and I quote, "With a primary target X in the 252 and 1/4 area, and a secondary target X1 in the 217 even area," end of quote. Well, 2 weeks ago, target X was achieved. However, target X1, the harder to get secondary target, is still live. I carried on in my commentary from 4 weeks ago, and I quote, "Finally, much as in the other grains, I have observed a possible bearish halfway hesitation from the May high to date. It makes up the second shoulder of the head and shoulders top and is really bad example of one here, but I'm using the knowledge from other grain markets to visualize this. Thus, we have a potential target X2 in the 242 even area as a possible target for this pattern. Be interesting to see if the market makes it that far, as it is just below the 50% Fibonacci line of the September 2019 to May 2022 move at 245.10, end of quote. Well, the market almost made it down there, stopping short of target X2 but closing below the 50% Fibonacci line at 245.10. We then had an extraordinary rally last week, ending up with a weekly key reversal up, which was not duplicated in any other grains market. The peak of the market was just short of the rising medium moving average, currently 298.70. But the bullish incentive evident there had been damaged by the 50% Fibonacci resistance for 2022 at 283.70, plus the neckline, currently 283.75 it should be, plus the neckline, currently 285.25 of the head and shoulders top, such that the peak this past Monday was made with an indecisive doji cross, which in turn was part of a 3-day bearish evening doji star pattern. Prices have followed on lower for the rest of this week after this 3-day bearish pattern, halting today at the rising long moving average, currently 257.75. So we still have outstanding targets X2 and X1 below, and we finish the week sitting on the long moving average. Well, what's next? Well, if we are to follow the other grains, then it would seem reasonable to see a test down to the 50% Fibonacci line at 245.10 and possibly a break lower. It then depends on what this market has an appetite for. Does it wish to continue lower, as seems the case elsewhere, or will it start the process for forming a double bottom? That is a question I hope will be answered by next time. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.